Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as was the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night if you guys are out there in the world. November 2022, it seems like it was forever ago, but it was really not that long ago. But I did put out a post and I was quoting Gold Telegraph where I said liquidity crisis incoming. And the post was, the Federal Reserve Bank of New York says bank liquidity may be tighter than thought with policy implications. You can't make this stuff up. Now, this was November of 2022. The way the banking system manages its cash suggests the financial system may not be may not be as flush as many now understand. Now, what's funny about this, right, is throughout 2023, we saw the pressure overflow for banks. Back in March of 2023, that is where we saw the most amount of pressure build, and then guess what? Banks started to go belly up. Now, of course, they pointed the finger because central bankers will never, say, hey, this is what's wrong with it. It's not, hey, this, that, whatever. They will always point the finger. Central bankers pointed the fingers back in 2008 at each other. They said, hey, this is the problem. That's the problem. Never taken accountability for their actions. Regardless, we will now face the repercussions of the Fed's 25 BPS hike. Banking liquidity is being constricted, the crisis is far from over, and a much larger storm is brewing. This was March of 2023. This was a few months after we got this headline article from Gold Telegraph, and this was actually posted by Reuters. This New York Fed, bank liquidity may be tighter than thought. Now, I quoted my own post from March as well, where I said retail is being told lies right now that their bank accounts are safe. Depositors will be covered and all is sunny in the world of finance. The truth is that the Fed is at a very scary point in time where either the decision to pause or raise rates will ultimately lead to systemic chaos. Now, a lot of people think that we have avoided the banking crisis, but ultimately speaking, the 2023 banking crisis that is still ongoing, it's still ongoing right now, was larger than 2008, realistically speaking, by capital lost. We have over here from Luke Broyles. Want to visualize the seriousness of the last 90 days of banking failures? Here's a representation of the inflation-adjusted size of bank failures of the last quarter century. See the bad omens? Things are breaking. Expect inflation volatility. And of course, he said Bitcoin is inevitable because this is a Bitcoin maxi. But regardless, here we have 2008, right? The largest bank that collapsed during that time, Washington Mutual Bank, $307 billion. Guys, Silicon Valley Bank was $209 billion. Signature Bank was $110 billion. First Republic Bank was $229 billion. Think about how crazy that is. Over $500 billion by three names. That's how serious the 2023 banking crisis is and was. In fact, there was an article that got put out on February 23rd, so just a few days ago. A year after Silicon Valley Bank failed, lenders are still feeling pressure on all sides. And you know what's crazy about this, right? Everyone was looking at where to put their money at once these banks started to collapse. Do I need to remind you guys what happened in crypto during that time? Bitcoin pulled back, maintained 20K, and continued to surge at a time where everyone was saying, that's it. Banks are imploding. The system is done. Bitcoin is also going to collapse. Crypto's going to collapse. And guess what? It was the biggest narrative for crypto to continue. But is this banking collapse done? No, we are still in crisis mode. Here's deposits of all commercial banks. This is a yearly summarization in percentage change. Just for reference, here we have 2007, right? Here's 2008, here's 2009, and here's 2010. Versus, here's 2020, here's 2021, here's 2022, and here's 2023. Negative 27.8%. That is how significant the amount of deposits on all commercial banks are becoming. People are pulling their money out of the banks. They're putting it elsewhere. Money market funds do have about $6 trillion in them, so money market funds are definitely seeing a lot of the demand from deposits. But I also believe that ETFs are becoming a major driver of this capital as well. But if this continues, the question is, what's going to happen with banks? Because as more and more money flows from banks to crypto, to stocks, to money market funds, whatever the case may be, where does that leave banks? The liquidity is constricting more and more and more. And in fact, a recent bank, New York Community Bank Corp., which by the way, back in the beginning of February, actually downgraded it because of fears of regional bank failures. Well, guess what? This happened on the 29th. Just in, New York Community Bank, NYCB, crashes 20% in after hours trading, citing material weakness in internal controls. Another one bites the dust. And here we actually have a full breakdown of it. Breaking. New York Community Bank stock, NYCB, crashes 20% plus after reporting material weakness in internal controls. The weakness is reportedly related to loan review resulting from ineffective oversight and risk assessment. NYCB is the same bank that acquired the collapsed Signature Bank during the regional bank crisis. This comes just weeks after the bank posted an unexpected $260 million loss in quarter 4 of 2023. The stock is now at its lowest level since 1997. NYCB will be filing their annual report late due to this issue. The board said a remediation plan will be in the 10K. There also seems to be some issues among board members as a CEO change was announced as well. And listen, as we really look at what's going on here, this is going to happen more and more and more throughout the entire year. And the reason why is because, like I said, the pressure is still looming. There's still a lot of concerns around liquidity. And the number one thing that I want everyone to focus on right now is, guess what? The Fed is about to give us a major update this month regarding rates. If liquidity does not improve, and if the rates continue the same, there's only going to be a lot more pressure on banks. It's going to cause a lot more bank failures, and this crisis is only going to grow tremendously more and more and more. Deposits are another thing that everyone should be watching for because this is a very significant change. This is also only applying more and more pressure. And at the same exact time, we are also focused on what's happening around crypto. Like I said, if we go back to March of 2023, Bitcoin is a clear winner of the US banking crisis. The narratives around bank failures, stablecoins, and interest rate hikes seem strong enough to propel the price of Bitcoin. And it did. Listen, Bitcoin dropped a bit down to about 19.6K, right, on March 10th. Fast forward to March 13th, the trading was almost 4K. 24 hours later, it was trading at 26K. And then it was at the same exact time that they were writing this article at 26.7K. A month later, we were nearly at $30,000 plus. And we continued to move higher and higher and higher to where we are at now, which is over $62,000. Think about how crazy that is. So crypto was the spotlight, and it continues to be the spotlight. And I question if the banking failures and the banking crisis that is still ongoing is setting in motion the largest narrative around crypto buying. Where's a safe spot to put your money? Oh, there's the ETFs, right? Pushing the price of Bitcoin even higher. In my opinion, that is where a lot of the dumb money is going, into ETFs, while most of those individuals out there that realize risk and realize reward ratios are probably looking at altcoins because they realize that Bitcoin is already at $60,000 plus. What is the upside on that? But regardless, we also look at XRP, right? Where does XRP fit in all of this? And this video comes to mind. This got posted by Crypto Airy on X. And this was back in December of 2022. Remember, this is right before the banking crisis really heated up and started to happen. $65 trillion off the balance sheet debt, which by the way, I think it's almost $100 trillion now. The BIS issued a report on, with its murky view of just how close we might be to a liquidity crisis. In my opinion, will set CBDC narrative into hyper mode, because injecting liquidity with today's inflation is not ideal. XRP might help. And by the way, yeah, focus on the stablecoin narrative as well. Even with CBDCs, stablecoins, kind of a mix of both. The Federal Reserve now is openly talking about stablecoins. They're talking about DeFi, how it might actually help the dollar. And I think this is because the Federal Reserve is now succumbing to the idea that, guess what? Crypto's not going away. Crypto's remaining extremely strong versus the banks, which are collapsing right now. So where should we put our focus? Where should we put our thought process on what is going to happen next? What are we planning next? And by the way, remember that the Federal Reserve has been planning around the CBDC for a very long time. They've been also talking about stablecoins. 2022, stablecoins did hit over $7.5 trillion worth of trading volume during a bear market, mind you. So stablecoins are definitely in their interest. They are focused on them. They realize the potential of them. It definitely does help the dollar because they are backed by the US dollar. They're all USD backed stablecoins. But regardless, how does XRP help aid in a liquidity crisis? How does it help avoid a liquidity crisis? Check this out. This is from Rahul Advani, the policy director at APAC at Ripple.
Now here at Ripple, we've built a CBDC private ledger that is based on the same blockchain technology that powers the XRP ledger, which was built for payments and designed for issuing currencies. Each central bank will have complete sovereignty and ability to customize their CBDC based on their own unique privacy and policy requirements. Neutral bridge currencies like XRP, which is an open source, public, and decentralized digital asset, will play a key role in facilitating such interoperability. And keeping sustainability in mind, the CBDC private ledger is carbon neutral and 120,000 times more efficient than proof of work blockchains.
And again, as we really look at XRP, their full focus is still on the idea of XRP being that bridge currency. Listen, a major transformation is happening around our financial system. We cannot keep this charade going around the fractional reserve banking system because it's not working. Things are breaking. The debt is getting outrageous. It's unsustainable at this point as well. This entire idea around CBDC, stablecoins, all of that only strengthens the use case of XRP. And I've talked about this a million times in the past. Unlocking liquidity is a big deal. We've talked about in the past the Nostro accounts. There's almost like $30 trillion in them. Beyond that, we've also talked about the economic value behind XRP and a lot of the solutions that Ripple has created utilizing XRP as well. The overall advantage of tapping into blockchain-based services is a ton of unlocked value. There's a lot behind this. And I really do think that everyone should be aware of how big of an opportunity crypto has right now, as we are starting to see the traditional world starting to crack, which is only going to lead to much larger failures. I really think that this banking crisis, which I even said back in 2023, I kept saying it, and I will continue to say it now, it's not over. This is just the beginning. And it's going to continue and continue and continue until it spirals out of control. And then it's going to be a domino effect. Every other day, you're going to see a bank collapse. And this is just the beginning, because just like I've said in the past, we never really avoided 2008 fully. It's still here. It's lingering on. We never bounced back. All we did was print and prop up the markets, pretending as if everything's okay. We're still at that point of no return where we're about to hit a brick wall, and there's only one way. There's only one way to bounce back, and that is to have a new financial system where we have CBDC, stablecoins, blockchain, and DLT services at the forefront of all of it. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join for Discord in the description below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.